Hey guys, Dave with Moneyology here. Hope everyone is having a great day. Today is Saturday, November 30th, 2019, and these are the charts around the world. Moneyology Month End Charts Edition. Our favorite charts are the month end charts. They give us the most amount of detail without any of the short term noise. And so we're going to take a look at close to probably 50, 60 charts right now. We're not going to go in through all of them in great detail, but as I scan through the charts, I'm going to this is basically going to be a recorded webinar. So we'll go through the charts as I see them and try to identify where the opportunities may be. So let's take a look. So starting with the houses sold, this is a data chart. You see that the houses sold have broken out to new highs, and I really see no reason why this chart's not going to continue going higher. Here the housing starts, new privately owned housing starts, all looks good. Nothing to see here. Producer price index kind of pulled back over the last, I'd say, 2 years from this point, but again, nothing really serious that I see here. Unemployment on the one hand keeps going down based on this index, but notice that momentum is starting to tick up a little bit here. So we'll see if that has anything tangible down the road. All right. So let's start with the 10-year Treasury. And guys, I apologize. Something's going on with my jaw. So I'm going to do my best here and try not to pause too much. But anyway, 10-year U.S. Treasury monthly chart. Look at this. This is very interesting. Since 2012, we saw really 3 times where we've hit close to 1.4 on the 10-year. Every time we've really bounced there. And we did so again this time around. So I'm watching to see what happens right around here as we approach the back test of this particular neckline. So I still think that we're gonna make a run for that 2.2 area on the 10-year to the upside. So there's quite some additional upside in the near term. But when this area gets hit, the question is, does it break through and create a new inflationary trend, or does it fall back and make this an unsuccessful back test and break to new lows? So we'll be watching this very closely. I think it's going to determine the next 3 to 5 years which way treasuries go, depending on how it performs at this juncture in the next couple of months. Here's the 10-year to the 2-year treasury yield, and again, it seems to me like we're similar. We're getting to a place where we're similar to what happened right around here, right? We kind of had this first initial bump, and then we pulled back, and now let's see what happens. Do we consolidate here for a while, or do we break out? So this is the yield curve, and right now it's kind of flat to slightly upward sloping. You see momentum finally broke out just a little bit here. That's kind of what happened here in 2007. So if that happens again, I think that we're going to see a pretty nice run to the upside in um, in equity markets. Here's the 5-year U.S. Treasury, still in relatively bearish territory from a longer term perspective, but if it can break above this trend line, then that might change. But in the meantime, I see this not going too much higher than perhaps 2%. Okay, Australian dollar, nothing really to see here. Canadian dollar, again, not really much to see here. Japanese yen. Japanese yen is kind of interesting. It's it's kind of backtesting this 50 RSI level right now, as well as the symmetrical triangle from the upside. So does this backtest and then break higher, or does this continue to go lower? So right now we're at kind of a very interesting critical juncture here in the Japanese yen. And for those unfamiliar, the Japanese yen tends to be a very pretty good indicator on equity volatility. So when the yen breaks out, then equity volatility tends to move up. Also, precious metals tend to do better under the circumstances. Swiss franc, another indicator that tends to be well correlated to gold. It hasn't happened so far, but in the past, it's done fairly well. But this is pretty interesting. It's a bullish descending triangle, and it's pretty close to the end of this coil. So either it breaks out or it breaks down, but this could be a pretty good trade opportunity. US dollar. So you see that on the one hand, the price is doing quite well. It's continued to rally off of that 9 month moving average. And you've got the 18-month moving average right below it serving as support. But it's still very much below this trend line. And so we're watching very closely to see this, the way this turns. CPPO is starting to curl a little southward. So could go either way at this point, but interesting development there. 20-year Treasury. So right now, this seems to me just a short-term pullback in amidst a much longer-term bull run. But this is a very interesting indicator. Right now, it's very bullish, but we're watching here. Commodity index. So this is commodity index is one of the most interesting charts because obviously you've seen since 2015 commodities have been just dead in the water, right? But at some point, I think this index breaks to the upside, and you're seeing signs of it right now on the weekly that it's starting to gain momentum and gain legs. Notice here that even though we're at similar prices to where we were back in 2016, momentum is significantly higher right now. So all it's going to take is a break above that 50 RSI to really get things moving. But so far, it hasn't happened yet, but we're watching. The US, or rather the developed markets ETF, we're interesting point right now. We're at the 61 level of RSI. That's kind of where we broke down right over around here. So are we going to see some short-term volatility? Time will tell. My hunch is no. I think we're going to break above this level here. Notice PPO is above zero, and it's curling in a very positive trajectory. There's a Dow Jones as by the DIA ETF, and it's breaking out to new highs. It's breaking out to new highs with the support of the moving averages to its right beneath it, and you've got momentum having broken above this trend line. So if this can break the 69 level, you're going to see another 5 to 10% move in U.S. equities. Emerging markets consolidating here on the 50 level should break out to the upside. You see PPO is curling here, so really, the emerging markets haven't done much of anything for a better part of, frankly, since 2017. And if you go all the way back to 2007, we're not even above those 2007 highs. But if that breaks above 44, you're gonna paint a different picture where we might see a run something similar to what we saw here, right? So there's a pretty substantial move coming. Its question is when. Here's the energy ETF, and you guys know I've been pretty bullish on energy over the last couple of weeks in terms of the setup. And here's one of the reasons why. Notice we're here at the tail end, the bottom end of this symmetrical triangle, and it just looks like it's building momentum slowly but surely, and looks like the next move likely is to this upside target around 67 and a half on the XLE, and then we'll be watching to see which way this breaks. Does it break to the upside or does it fall back? European financials are interesting. Notice PPO has basically closed above zero right now, or just about there. We're now above the 9 and the 18 moving average. So we've double bottom here with positive divergence. Now we're above the 51 RSI level. So European financials are a very, very important indicator to watch to see how the markets are really feeling about this overall strength of the economy. But right now they look good. Here's the financial ETF and breaking out to new highs, albeit with negative divergence. That's okay if you're continuing to break to the upside. I think that's going to be taken care of. Notice PPO is above zero, so the financials are a great area to buy right now, in my opinion, because I think they've just been hit over the last couple of months, and they've underperformed on a relative basis. But that's probably going to be changing very soon. Here's the URA ETF. This is uranium and uranium related names. I digested the holdings here, and really there are only a few uranium holdings in the entire ETF. So I don't know if this is a good barometer on the segment, but here's the downtrend, and until it breaks excuse me, guys, until it breaks to the upside, we're still in a downtrend based on this particular ETF. Gold miners still consolidating here. We've consolidated here for basically since July, so still well above the nine-month moving average, and still very much in bullish territory. Uh, Gold majors, same thing, just consolidating, waiting for that breakout back to the upside. I think we're going to see much, much higher prices, but can't really tell based on these charts right now. Uh, Gold, so gold again down 3% in the month of November, still above the 61 level and above the 9-month moving average. Not concerned about gold at all. Use any opportunity of weakness to accumulate. Solar's been in a pretty good uptrend since 2017. Kind of pulled back a little bit here on the TN ETF, but I think that's an opportunity to add long, as I think we're gonna recover recover very soon. Go to new highs. Here's the junk bond ETF, and yeah, we're right here right now. We're at above 69 on the RSI, even though the chart's kind of destroyed. Let's clean this up just a little bit. I can do it on every chart, but this one's pretty messed up right now. All right, there we go. All right, Nasdaq breaking out to new highs. In fact, is breaking out above this particular "quote unquote" bearish wedge, and when a bearish wedge breaks to the upside, it's a very bullish sign. Looks like we're close to the 69 breakout. We're already above it right now. Closed the month up 4%. So Nasdaq looks very strong right now. Real estate kind of pulling back just a little bit, but still very much in solid territory. Russell 2000. Notice Russell hasn't really done as well as Nasdaq and the Dow. So this is an opportunity to play catch up. I think the Russell's going to spend a lot of time outperforming the major indices very soon. Here's the growth ETF also breaking out right now. So you got momentum getting ready to break above 61. So it's been consolidating for quite some time. You got PPO finally getting ready to break above the zero line. Same with the value index, SPY breaking above the 3-year downtrend right now, and in very, very solid fashion. So anybody surprised by the market breakouts should not be if they've been watching our charts. Home builders. So home builders right now are breaking out to new highs, but with pretty substantial negative divergence right now. So that's an area to look for potential weakness on any market pullback. Now, this is a sector that I'm watching very closely. Steel. Steel has been in downtrend since 2018, and some of the steel stocks have dropped 70, 80% in this time. Yet, I think that there's an opportunity right now to get in the midst of the beginning of a new uptrend. This is kind of what happened over here. I think we're going to be seeing the same sort of move to the upside. So we're watching steel very closely, and we'll be covering some steel names in a premium watch list perhaps later this week. Technology has just been killing it, absolutely killing it, way above the 69 level right now, breaking out to new highs. Technology looks really good. Transportation looks to be breaking out right now. Home construction, again, breaking out to new highs, but with a negative divergence. Nonetheless, it's above the 69 area, so home construction looks like it's solid territory. Okay, so here's an interesting chart. This is a gold relative to the S&P 500. So you saw gold made a relative new high here back in middle of 2019 relative to the S&P, but it looks like it's pulling back some. I think at some point this turns back around and makes a new high. We're certainly in a new, in my opinion, a new uptrend with gold relative to the S&P. Even in the last couple months, that has not been the case. Here's the airline index, kind of breaking out from this rounded top. I think, to the upside. That's a positive sign. PPO has closed above zero. Baltic Index, interestingly enough, is kind of potentially back testing or breaking down. It's down about 20% this month. Don't know if that means anything on its own, but something to keep an eye on. Dow Industrials, we saw that earlier in the DIA, breaking out to new highs. PPO is curling above zero. The transports doing the same. Dow Utilities. So Dow Utilities pulled below the 70 marker, so that's an area that might be showing some renewed weakness. Euronext 100 index breaking out to new highs, with albeit with slight divergence, but nonetheless breaking out to new all-time highs. Gold right now, so long as it's above that 1430 area, I think it should be fine. Frankly, if it stays above that 1400 area, it'll be fine. But right now, we close the month about 3% down, but yet still above the 61 level. Gold bugs index HUI looks strong, well above the downtrend, just consolidating, eventually setting up for break above 245. Crude oil. So kind of pointed out this inverse head and shoulders, and now it's kind of consolidating in this descending triangle. I think that this is going to break to the upside. When it does, crude oil names are going to have some really, really good opportunities. Make sure you do your due diligence, and you'll be handsomely rewarded. Platinum also kind of trying to bottom here. There's a lot of upside supply. Every time it seems to rally, it gets knocked down, but nonetheless, above the 50 RSI level, it's a good spot to be in. Shanghai Index. So we've got a descending triangle breakout here back in middle of 2019, but it needs to get back above that 50 RSI level and soon. If it can hold that level, then I think we're off to the races. But until it happens, we're kind of on shaky ground. Tokyo, Tokyo's breaking out to new highs here or close to it, but it needs to rally. Otherwise, it can potentially force an invert or a head and shoulders pattern. This is a very fascinating index. Here's the TSX monthly. Notice is breaking out right here. It's peaking above this zone here. So that's very, very positive. And I think in Canada, if which is very, very heavy in resource names, this is a good indicator that commodities are going to start really running soon. Here's the Vix monthly, and this is kind of my point. I think we're very close to a downside breakout here and head all the way back to 10. And if that happens, that's really going to premeditate that 5 to 10% move in equity markets that I'm seeing right now. Here are the world markets breaking out to new highs in momentum and multi-year highs, and certainly price I think will follow soon. Here's crude oil. We kind of covered that one. 10-year German Treasury. You see just the start of an uptick in rates. So that's an inflationary sign. Here's the German 10-year versus the U.S. Treasury. Here's the Japanese Treasury. So notice we've since 2010 and beyond. We've been in a downtrend in rates, and that's changed in the middle part of this year. So all I'm saying is this is an inflationary signal. Would be very, very bullish for commodities. Here's the S&P against the world. Continues to rally and run higher and higher and higher. Eventually, that's going to break, but until then, S&P is a great place to be. Here's the 20-year Treasury bond versus the S&P. It tagged this particular trend line and has fallen so far. So right now, equities are the place to be until this index can break to the upside. Here's the 20-year Treasury chart versus the tips. So long as this is in an upward trajectory, you're seeing a deflationary longer-term trend. We'll see if this is a breakdown or back test to new highs. Here's consumer discretionary against the staples. This is a great time to look at this index or this ratio because it's underperformed for the last couple of months. but I think it's setting up for a move back where the discretionaries will start outperforming staples. Here's the developed markets against the S&P. Still, the S&P is the place to be. Emerging markets against the S&P. Just when you think that emerging markets are breaking out, they seem to be making new lows against the S&P, and will continue doing so. Here's gold against copper, pulled back a little bit here, but I think it's close to finding its support. This is a very interesting ratio chart. So investment grade corporate bonds versus high yield corporate bonds. So since 2008, investment grade had been outperforming high yield, and that changed in the middle of 2019. That's a very, very bullish sign for the market. It's one of the biggest reasons why I became net bullish on the equity markets when this particular indicator broke out back in July. So this is a very positive sign. I think we're going to see a multi-year run in. Wait a second, hang on. So this is the investment grade bond relative to the. So actually this is different. Sorry guys. So this is the investment grade bond relative to the high yield bond, and so investment grade is actually starting to outperform high yield. So that is actually an interesting sign, where high yield might be an area of underperformance. And I'm not sure why that is right now, the equity markets, but perhaps this is a dislocation worthy of note. Because if this continues to break higher, which it looks like it may, then you're going to see some turbulence in the markets once this continues to ride to the upside. Gold juniors versus the majors, you see that we're very, very close to an upside breakout here. PPO has been curling on the weekly charts, it's been bullish. And so I think we're a couple months away. Silver juniors against silver miners, same thing. You're seeing some positive momentum being built, and I think that this is going to break out to the upside very, very soon. Platinum versus gold. Now platinum can't seem to want to move higher, though it has moved above this particular downtrend. So momentum is starting to build for platinum, but I haven't seen it in price yet. So even as base metals start looking good, precious metals look like they've bottomed here back in 2019 against base metals, and likely will resume their upward trajectory very soon. Russell 2000 against the S&P. So far, I don't see anything yet, but this is an area that I'm watching because I think in an upward moving market, the Russell might really run here in the coming couple of months. Russell 2000 growth versus value. You see growth has continued to outperform value, certainly since I'd say since 2002, with a very rare exception here. So I think that growth is still the area to be in. So we might be seeing a divergent new high here, or we might be seeing another breakout of the S&P versus the emerging markets. Yeah, so the S&P versus the bond index continues to move to new highs. S&P small cap against the S&P large cap, and you see the small caps have been underperforming all the way since October of last year. So is this trend going to change soon, or is it going to be moving lower? So silver against gold. This is an area that you want to see silver start to outperform gold in a new bullish market. You kind of see it already, but it's got some work to do in price. Here's a global gold index, just mimicking similar what we've seen in similar charts. It's uh, it's consolidating right now, and there's really nothing to see. Wilshire 5000 breaking out to new highs, all-time highs in price. is very positive. So all overall, net guys, I think equity markets look very very strong. There's some that look stronger than others. You can look to some of the names that haven't done as well, such as the Dow transports, such as the financials. Those are areas that I'd be looking at, and the commodities right now relative to just chasing the momentum names like technology and so on. But anyway, a lot of opportunities. I think we're going to see a 5 to 10% move to the upside in the equity markets over the next 6 to 12 months. At the same time, precious metals are an area you want to look at. I'm continuing to look at uranium because I think that's an explosive sector, no pun intended. And just overall, net bullish on the markets. I think you're going to see a blow off top right now, rally that eventually will end bad. But until that happens, I think we should find many opportunities in various different sectors. So that's it, guys. Have a great month of December. Wish you all the best in trading, investing, and stay tuned for weekend reviews as well as premium reviews throughout the week. Mondays, we're going to start. We started last week. We're going to start covering guru portfolios. So we're going to take a major Wall Street legend and look through their portfolio from a technical perspective based on the most recent filings from the 13F. So that's on Monday. Tuesdays we're going to try to cover precious metals. Wednesday we're going to have a miscellaneous video, and then Thursday we'll probably cover uranium. So we might mix it up here and there, but that's kind of the schedule that we're looking at right now. Have a great one. Take care.